You are watching Huskin's Forex and Financial Market Brief. For a low-cost trial to premium Forex coaching, click on the link below.
Life is too short to wake up one day in the morning with regrets. So love the people who treat you right. Forget about those who don't, and believe that everything happens for a reason. If you get a chance, take it. If it changes your life, let it. Nobody said that it would be easy. It's just promised that it'll be worth it. Today is the daily review of May the 14th and the preview of May the 15th, your daily dose of events that shape the Forex markets. Let's look at our results. We unfortunately had a loss on our trade. We were dead right. We were dead right and we still had a loss on the trade. Let me explain through our next segment looking at the markets. Let's look at the markets. Now, if you recall, yesterday I said that we were expecting the US dollar to continue to make new highs. That meant that the Euro USD would continue to make new lows. And we were short on the Euro USD, and because the higher time frame was that we were going to go down on the Euro USD, I went on with my trade, and let's see what happened. This is the chart of the Euro USD daily chart, and as we had predicted, the Euro USD would have a down day, and it in fact did, but it stopped us out before it went down. So it went up and it stopped us out and came down, so we were dead right, but we lost money. But that's just the nature of the game. Sometimes you lose money, sometimes you make money. The entire idea of Forex is to make more than you lose. And you can do that in a consistent basis without losing your shirt off. You'll do really well. So now let's look at the markets. Look at the the US dollar index making new highs just as we expected. Now, if you see, we are making new highs on the Dow. Dow closed really strong again, just as we were expecting. And gold, I was expecting gold to fall, and here, lo and behold, it has fallen. But see the difference? Look at the US dollar. Nice strong move upward and closed right on top. The Dow, nice strong move upwards and closed on top. The gold tried to move up and then close down, but just a little bit. So the downward pressure on gold is not as much, but it's not a time to go long. It's not a time to go short either, because fundamentally we have gold prices which need to increase. So I use technicals to get my entry in line with the fundamentals, but I never ever trade against the fundamentals. Now let's see other stuff which is happening all over the world. Now, there were record bond sales in emerging markets. Just a few days ago, I mentioned about the record sales for Apple bonds, and now there's this company called Petrobras, basically stands for Petro Brazil, and it's one of the biggest companies in Brazil, and it raised a record 11 billion. That is 11 billion in emerging market bond sales. Now, the Brazil's state-run oil company Petrobras set a record for emerging market bond sales with the issue of 11 billion worth of debt. The offering is in part of the company's fundraising to develop the biggest offshore oil delivery in the Western Hemisphere over the last 30 years. So that's what Brazil has been up to. And what does this signal? This signals to us that that people are taking on risks. Why are they investing in bonds? And they're investing in bonds, and I'm still saying that they're taking on risk. Normally, people invest in bonds when they do not want to have anything to do with risk. But this is, you need to remember, this is an emerging market bond. It's not as safe, let's say, as a US Treasury. So basically, they are investing in the fact that they expect Brazil to do well and at least pay up its obligation on the bond. Now, UK home prices surge, highest till 2010. Now, the housing prices in Britain increased to the highest level in nearly 3 years in April as the Bank of England launched a program to stimulate demand. The Royal Institute of Chartered Surveyors said its index of UK's housing prices advanced to a positive one last month from a negative 2 in March. That's the first time the reading has been above zero in nearly 3 years. Now, my assertion is that Janet Yellen is the possible replacement for Ben Bernanke. A little bit on what Janet Yellen is all about. She's an American economist and professor who is the vice chair of the board of governors of the Federal Reserve System. She is 66 years old, all thanks to Wikipedia. And basically, she is from Yale. But what's her main characteristic? Yale is one of those candidates which focuses heavily on job growth, and there is a little bit of expectations on whether she'll be vigilant enough in the fighting of the prospects of inflations. Although many consider her strong background to be ideal profile for the position, but she's not inflation watcher. So what does this actually mean is when she comes on, the policies by Ben Bernanke are going to remain in effect. We're going to have quantitative easing going on. The interest rates aren't going to go up much high. And that leads us to the next question, which is, which inflation is the correct inflation? We have the CPI, we have the change weighted CPI, and we have the PCE. Let me try and explain to you these concepts. Okay, now the most popular one is the CPI. The CPI is a representative basket of goods and services drawn from a survey of the spending habits of about 12,200 households. The index assumes that the consumers buy the same quantity of each commodity from one period to the next until the basket is updated every 2 years. The change in the cost of that basket is the inflation rate. But this kind of, it skews the entire cost of living because consumers constantly adjust their spending patterns to buy more of what is cheap and less of what is more expensive. So, for example, let us say that fuel costs becomes super expensive. I might start driving less. So my CPI is not going to go all that all that high because I spend less on fuel. And so if we had the same basket, which was perhaps let's say in 1990, we would have had a very high CPI. But the very fact that they keep on changing this basket to affect what the new prices or new commodities the consumers use skews up the CPI. Some say that CPI yet overestimates because the market, the basket is updated only every 2 years, but people in real life can update their basket every second. If tomorrow the fuel prices are too high, I could choose to go by bus. And this will not be reflected in the CPI basket till about 2 years. So there are both sides to that argument. All right, now then we have the weighted CPI. I'm not going to go into detail of the weighted CPI, but something which the Fed uses, which is called the PCE. What does the PCE stand for? The personal consumption expenditures. So basically, this is what the Federal Reserve concentrates on. And what is the difference between both of them? So the PCE does not strip off the volatile food and energy categories underlying the PCE inflation divide to 1.1% in March, while core CPI inflation has stabilized at about 1.9%. You look at this. This is PCE according to the one Fed uses, and this is the CPI. So the what is very important is that all of them are moving in the same direction. So if they were moving in different directions, then there would be some concern as to which inflation measure to actually use. The PCE includes some things the CPI omits, such as the share of medical expenses borne by employers and the government's supposedly free services, such as no-fee bank accounts. Now, even if there are no-fee bank accounts, somebody is paying for them, and the PCE takes into account all of that. Now, this lower rising medical and financial service costs explain most of the recent drop in PCE inflation compared to the CPI. See, CPI is stabilizing out here. PCE has dropped. Why is this dropping? Because of the slower rise in medical and financial service cost. Now, neither effect seems to reflect broader economic trends, and once they fade, PC inflation should actually rebound. So once the effect of the lower increasing medical cost in USA, as well as the bank financial sector not increasing their banking charges are done with, we should see PCE again start creeping up, at least towards CPI. So that's it, folks, for today. I hope you had a nice understanding on what the correct inflation measure is, at least in from the perspective of the Federal Reserve. And let's see, what do we have for tomorrow. We have the United Kingdom's claimant count, basically the unemployment numbers from United Kingdom at 4:30. It's a green one, so we'll be trading that. And let's pray for our success. Thank you for watching this video. Have a fantastic day. Bye for now.